Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 7th through October 11th. We're in part one of our weekly trading game plan. We'll try to help you make money trading in the fall. So let's get started. So here's our notes document for part one of our weekly trading game plan for October 7th through October 11th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as previous weekly trading game plan notes. And you can also find a direct link to this Google Drive folder in the description box below. Welcome, Fairchild, to Ricky Khan. Thank you for joining us in the chat today. Hope you all had a great trading week and are doing well. Welcome, Gerald Pitts. So let's see how the markets ended up on Friday. Look at the main page in FinViz. We can see we got a pretty positive Friday. So the Dow ended up 0.81%, NASDAQ up 1.22%, S&P up 0.9%. So we'll see pretty strong ending into the end of the day in the afternoon on Friday. So we ended up with 68% advancing, 28% declining. We've got 79% new highs, only 20% new lows. We've now got 66 or 2/3 above their 50-day moving average, only a third, 34% below. And we've got 68% above their 200-day, only 32% below. So again, overall bullish day. We'll talk about how the jobs report that came out was better than expected. Actually, all the jobs data this week better than expected. And so we had a significant exuberant rally right after that in all the indices. So we see the Mag 7 very strong. Again, we'll see that really the Mag 7 were driving the NASDAQ up. So again, a rotation back into the Mag 7, back into financials. Not a whole lot of red. It's pretty much a risk on. We'll see bond yields spiked up significantly, impacting some of the interest rate sensitive sectors like real estate. Also, again, a risk on day. So utilities slightly red as well. We look at the news. So shift after the jobs report. Again, we'll see this exuberant rally after the better than expected jobs report. China home sales pick up. Again, the rally in China in general has continued. Dow logs record high. Treasury yields jump after strong jobs data. Again, we'll see that strong spike in the bond yields, significant drop in bond prices, blowout jobs report. Jobs day shocker, great risk rally of 2024. Dow jumps 300 points. So again, after that jobs report, we'll see significant exuberant reaction in the stock market. Again, with the increased tensions in the Middle East, we saw oil spike up, back up, briefly spiked above 75, retraced slightly down. So we've got resistance at 75. Again, increased tensions in the Middle East could cause further upside in oil. Natural gas briefly broke above 3, got rejected off of 3, trended down a little bit. Gold's been consolidating right under our 2,700. We can see the futures and all the indices are pointing significantly up. Can we see that big spike in bond yields? So the short term 4-5 year was up almost 5%, 10-year up 3.4%, and 30-year up 2%. So bond yields spiked up, prices spiked down. Get on the jobs data. Actually, we had several days worth of jobs data that caused increases in yield, drops in bond prices. We'll see that in the futures as well. Welcome, MD, Shaka, Cthulhu, Balu Dog. Thank you all for joining us today. Hope you all are doing well. So if we look at a breakdown of the major indices and also the technology components, and again, just a quick reminder, you can access these screeners in our notes documents and also in the screener sheets of our ETFs and Watchlist Google Sheets. So again, we see pretty exuberant rally in all of the indices. Dow's been very strong. Again, you can see it's hugging that upper trend line as support. So we'll see if the Dow retests its recent high. IWM, again, not as strong. It's bouncing off that support from the short-term moving average. Got a double top. It was kind of interesting. It did rally quite a bit on that jobs data, even though the bond yields did spike up, and small caps are going to be more sensitive to interest rates. SPY, again, you'll see it's testing its all-time highs, shallow upward trend, got good support from the lower trend line, plenty of room above its near-term moving average. Again, the Q's not as strong, hasn't really broken its recent September high, downward sloping trend line. So again, technology not quite as strong, trading more laterally right now. Welcome aboard to Be Free. Thank you for joining us today. Hope you had a great trading week and are doing well. We look at the breakdown of the technology components. Again, we saw, some risk-on behavior. So we got some ARK just briefly testing its longer-term trend line, but really not going anywhere. Again, the FANGs have not, really been the leaders. So we talked about the reign of the Magnificent Seven possibly being over. And again, even though Friday we saw really the Magnificent Seven kind of drove the indices, they're not really trading mostly laterally right now, downwardly trending trend line. Got support from the near-term moving average, but again, Magnificent Seven doesn't seem to be really driving the overall markets. The market's broadened out. Semiconductors got a spike on some positive comments from Jensen Huang from NVIDIA, possibly fueling the AI FOMO a little bit again. So we got a little bit of a spike, but again, we saw that death cross on SOXL. And again, it's been trading right around that longer term or that shorter term moving average, resistance from the longer term moving average. So again, not really going anywhere either. Biotechs trended down towards that lower trend line, kind of hugging the long-term moving average right now. So when we get a risk on, get a little bit of a bounce. Again, they're going to be sensitive to interest rates as well due to high debts. Again, TQQQ is just leveraged on NASDAQ, so it behaves the same way as the NASDAQ. And again, broader technology not really going anywhere either. Hasn't retested the September high again. We can see that's a multiple high. Also, again, it looks like we're approaching a potential death cross on the broader technology, and it's trending downward. So again, technology in general, not as strong as, say, the Dow, etc. So I hope that all helps. Grab a quick drink and we'll look at the breakdown of the groups, sectors, industries from this week, see if we can see some sector rotation opportunities. Welcome, Katon, trader formerly known as Easy Mike. Thank you for joining us. Hope you had a great trading week. So if we look at the groups of sectors, the industries in FinViz, again, Friday, pretty much risk on. Also, we saw a bounce in energy due to increased oil prices. Also see uranium's been very strong. Again, we saw risk on back into technology, cyclicals, again, risk on. So defensives, utilities, healthcare is the least positive, and real estate again negative due to that increase in bond yields. For the week, again, energy very strong, increased conflict in the Middle East, driving oil prices up. Again, uranium continues to be strong, natural gas trending up, communication services, financials rebounded. The weakest, again, real estate and basic materials and defensive. So again, generally risk on for the week. For the month, however, basic materials very strong. So again, we saw short-term rotation back out of basic materials. Energy generally strong. Utilities had been generally strong. Weakest, again, the defensive sectors and real estate. From an industry standpoint, you'll see again uranium very strong. So we've got two factors driving uranium, both the trend in nuclear energy improving and also the trend in the XLE, the overall energy sector, pushing uranium further up. We see energy in general, oil, natural gas, a little bit of a rebound in the financials. Silver still up. Gold slightly down. Again, it's been pretty flat. A resistance around that 2,700. And again, the most negative are the real estate, REITs. For the week, again, oil. See a dominance of oil, energy. Again, some materials negative, copper slightly negative, coal, again, real estate negative, gold show negative, although generally still flat, solar negative, again, interest rate sensitive sectors, bouncing bond yields, again, uranium's been very strong all month long, utilities, materials, silver, gold, copper, etc. Again, part of that, industrial metals based on China stimulus. And not a whole lot negative, mostly real estate for the month. And again, bouncing bond yields. So we'll see if real estate recovers, if we get a reversal in those bond yields. Okay, we'll go over the economic data we got from this week, look at the economic data coming up for next week, quickly go over some of the highlights in our notes. And also just a quick reminder, as soon as this important economic data comes out, important economic news, I try to post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord's free to join, so you can find an invite in the description box below. So again, as important economic data news comes out, try to capture it, screenshot from investing.com, the raw data, etc., or the news reports. So again, a great way to get real-time economic data, news. Also, we have plenty of channels where you can discuss all things related to trading for different asset classes, different trading styles, etc. So we'd love to have you join our Discord, help each other out, make money trading, and also get real-time economic data and news. So I hope that helps. Welcome, Walter Lyons. Thank you for joining us. Hope you had a great trading week, are doing well. So Tuesday, we got some manufacturing data. It was a little bit, global was a little bit better than expected. Construction spending a little weaker than expected. And overall manufacturing slightly weak. So again, we see that slightly slowdown in manufacturing in general. And then we've got several employment-related, job market-related pieces of data, all of which, in my humble opinion, were generally better than expected and show a resilience in the job market. And so we saw pretty much a rally in the markets Wednesday through Friday. Again, in my humble opinion, all based on resilience of the job market. And we saw uh, on the jobs data from Friday, particularly the probability of a 50-point rate cut by the Fed in November dropped to almost zero. So again, now there's even talk that they might do, no rate cut in November. So significant change over what the market was thinking. 50 basis point cut possible in November. So JOLTS, the job opened jobs, was significantly higher than expected. That's not really something the Fed wants to see, as it shows um, discrepancy in the supply and demand in the job market. And Thursday, we got challenger job cuts, so a little less than previous. We also got initial claims, continuing claims. Again, initial claims pretty much as expected, a little bit higher, but not significant. Continuing claims pretty flat. So again, not a significant deterioration in the job market. So again, the job market remains resilient. The 4-week average better than previous. And then Friday, we got the non-farm payrolls data, again, significantly better than expected, 254K versus 147K expected. So again, shows that the job market continues to be resilient. Unemployment rate was actually dropped. So instead of 4.2, it dropped to 4.1. U6 unemployment dropped from 7.9 to 7.6. So again, all this data is showing the job market remains resilient. The Fed doesn't need to cut to meet their employment mandate. Hourly earnings up a little bit month on month, year on year up a little bit. So again, all very positive. Also, the August jobs data was revised upward. So again, all this jobs data shows that the job market is resilient. Fed doesn't need to cut. They don't, in my humble opinion, they don't really need to cut at all. Or if they do, just since they're on the path of cutting, maybe a 25 basis point cut in November. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered education and for entertainment purposes only. So if we look at the rest of the economic data from this week, again, we've got Fed officials talking, so that will create some volatility. Some bond auctions, not too bad. We talked about S&P, the manufacturing, ISM manufacturing. Again, manufacturing sector weakening, but not significant. AP crude oil stocks down, but less than expected. Again, price being driven by the turmoil in the Middle East. More Fed officials talking. The OPEC meeting, there was discussion that there might be a strike from Israel on oil production in Iran, but I think there was a comment that the Saudis would backfill the supply if there was a loss of supply from Iran. So again, oil prices did spike up a bit over 75, but the supply seems to be stable. We'll see if there's any further conflict that causes further spikes in oil prices. Mortgage rates, pretty steady. Talked about the ADP non-farm employment. So again, all the employment data is showing resilience in the job market. So it's better than expected as well. Crude oil inventories up significantly. So again, we've got a surplus right now. Talked about challenger job cuts. Global services PMI, a little lower than expected. So again, not inflation in the services sector. Employment, non-manufacturing employment down a little bit. Natural gas storage up, but less than expected. So again, we saw natural gas prices briefly breach 3. Bond auctions, again, not too bad. Talked about non-farm employment. And the oil rig count dropped again, so that's interesting. So, and the total rig count dropped a bit. So again, we got a number of factors driving oil prices up. Look at the economic data coming out next week. Again, Fed officials talking, again, source of volatility. We'll hear what their comments. I heard several comment that the job data was great. It shows resilience to the job market. We'll hear if they talk about, maybe they don't need to cut in November. So we'll hear if they have anything to say along those lines. More Fed officials got mortgages on Wednesday, wholesale inventories, got FOMC meeting minutes. So Wednesday, people will be looking to see what kind of discussions were had in the last FOMC meeting. We had one person not agree with the 50 basis point cut. So we'll see if there was further disagreement, further notes about their path forward. So that will probably be a source of volatility and a lot of people watching those Fed official or Fed meeting notes. And we get important economic inflationary data on Thursday, core CPI. So this is a consumer inflation. So if this comes out hotter than expected, again, that may further quell any probability of cuts. Get weekly jobless claim data. Again, we'll see if the job market continues to be resilient. And we get producer inflationary data. So core PPI, PPI all on Friday. So again, also Michigan sentiment. So again, late in the week, plenty of economic data, possible sources of further volatility. Welcome, Fairchild. If I missed you earlier, thank you for joining us. We're also just starting into the next earnings season. So again, you can get the whole earnings calendar for the upcoming week in investing.com. And in a minute, I'll show you where you can see the near-term earnings calendar also in Webull. So again, we've got PepsiCo, so we've got some manufacturers, consumer related starting off. Again, pretty slow Monday, Tuesday, starting to pick up a little bit on Wednesday. I know the majors are major financials, I believe, are all on Friday. Tilray, so some cannabis, AHR, AI related, data center related. And then Friday, again, we get the first of the major banks, the financial sector, JP Morgan, Wells Fargo, etc. So again, the earnings season will just start to really kick off again late next week. So again, you can hear, how to trade earnings, how we trade earnings, and when earnings matter. It's definitely going to matter. We'll see what their discussions on impact of the rate cuts, impact of the global tension in the Middle East, etc. Also got, the election November 5th. Next FOMC meetings the 6th and 7th. So again, plenty of sources of potential volatility coming up in the next upcoming weeks. So I hope that all helps. Grab a quick drink and we'll go look at the market screen in Webull as well. Just a quick reminder, if you're not already using Webull, they're still offering 75 free fractional shares of stock, also a 6.25% interest rate on uninvested cash. Again, it's a bonus for the 30 days. Again, as Fed interest rates drop, these interest rates will drop, but this is still better than bonds, better than current money market. So again, if you're not already using Webull, great time to get in, get your bonus interest. If you invest 25K or more, you get 75 free fractional shares, 6.25. Under 25K, 20 free fractional shares, still get the 6.25 interest, and each fractional share is worth $3,000 to $3,000. And if you'd use our affiliate link in the description box below, you can get all of these current promotions and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen of the online browser version of Webull. So here we can see our histogram of advancers and decliners from Friday. So we see significantly about over 2 to 1 advancers to decliners, but the percentage of advancement relatively small. The negatives relatively small. Thought it was interesting that the net inflows between the NASDAQ and the NYSE is kind of reverted to what we had been seeing for a long time. So we got a steady inflow in the NYSE, steady outflow out of the NASDAQ. So again, even though we saw the NASDAQ index was up significantly, there was a net outflow of funds, a little bit of a pop at the end of the day. So this was the trends we had typically been seeing on a Friday. Past couple weeks, it's been different. So it looks like it's reverting back to what we had been seeing in terms of inflows on Friday. Also wanted to look at the treasuries again. This very clearly shows the pop in treasury yields right when that jobs data came out on Friday. So we see the 1 year popped up to 4.2%. 2 year popped up again right as that jobs data came out. 2 year yields popped up to 3.9%. And the 10 year popped up to almost 3.97%. So now we've got an inversion between the 1 year and the 2 years, also between the 1 year and the 10 years. Not inverted between the 2s and 10s, but pretty close. So again, significant pop in the yields on that jobs data in the treasuries. So if we look at also just a quick reminder, you can see the near terms earnings calendar in the calendar section in Webull. So again, who's reporting in the very near term? We see that SAR, it's a dividend paying stock. ACCD, I think, is an insurance company. Napa Auto Parts. So you can see, again, who's reporting in the near term, how that might impact your trading. There's PepsiCo, Pepsi. We look at the best performing industries for the week. Again, uranium, number 1, oil and gas, number 2 and 3. So again, energy, aerospace defense. So again, increased tensions in the Middle East, driving the defense stocks up. Real estate, pretty split. Semiconductors, actually mostly negative. Software. Construction, mostly positive. Again, coal, probably driven mostly by XLE, the whole energy sector. Look at ETFs. So up on the Russell, up on small caps, up on the NASDAQ, up on the Dow, up on mid caps, and up on the NASDAQ in general. Long on Bitcoin, I think that's short on yen, short on volatility, up on small caps, up on the Russell. Lithium, jets. So again, we heard jet or Spirit is potentially going to declare bankruptcy. It drove all the other airlines up. So the Jets ETF up, healthcare, financial services, communication, pretty much, energy, almost everything's going to be up from Friday, basic materials. So the weakest, again, real estate, one of the few negatives. Commodities, aluminum, broad metals, that's a broad metals ETF, oil, USOI, again, dividend payer on oil, aluminum, metals. Must be a high yield. Okay, so let's also look at the futures. Just a quick reminder, you can now also trade futures in Webull. You can hear their previous promotion and discussions on trading futures in Webull via the link to the discussion in our Discord. Okay, so again, we can see, pretty strong, and the Dow hasn't really tested that 4,300 level again. Potentially retest that. Got rejected down. Again, very positive. S&P hasn't tested its high recently, but again, exuberant rally. Most of the week on the stronger than expected jobs data. Nasdaq not quite so. Trading pretty flat, but again, an exuberant rally on the positive jobs data. It's interesting, the Russell popped up too, so pretty much everything popped up on that positive jobs data. Even though your small caps, we saw the bond yields, so interest rates and the probability of future interest rates popped up. Probability of cuts dropped, and normally the Russell small caps are going to need rate cuts, so and a little bit of over exuberance in the overall markets. We'll see if we get a correction, in small caps due to that. All the other markets, DAX, Euro, Nikkei, all popped up as well. We had seen, we've got a climbing volatility. VIX futures still sitting a little bit above 20. Did get a little bit of a retracement on that positive jobs data that we saw. So we saw the SPXY, popped up. That's the short on the VIX. I also want to look at the VIX term structure real quickly. Just a reminder again, you can find this VIX term structure link. It's also in our ETFs, in the screeners, in our ETFs Google Sheet, but you can also always find it in the links section of our homepage. Again, our homepage is beachbumtrading.com, bum without the U. So I thought this was pretty interesting. So we see this in the near-term month, the VIX is still up over 20, even though the actual VIX is below 20, 19, 20. We see October, so still quite a bit of backwardation. So November is below 20, even though we've got the elections, etc. So in my humble opinion, I would expect November to elevate a little bit. Then a drop in December, and then the curve going forward is relatively shallow. So again, I would expect that November to pop up a little bit. So again, if you're a futures trader, the November contracts might be a little bit cheaper than the Octobers right now. And again, December's even cheaper, although again, in my humble opinion, after the elections, we'll probably see what they call a vol crush. Significant decrease in volatility as the elections will, resolve uncertainty in general. So, and I thought that was Pretty interesting. Okay, we talked about how oil had popped briefly above 75 on tensions in the Middle East. And if we get further escalation of those tensions, oil could drive back up into the, high 70s, retest 80. Otherwise, right now, that 75 is a resistance, got plenty of support around 70. We saw the rig counts had dropped a little bit. So again, plenty of support in oil in general. And natural gas tested a break of 3, got rejected, trending back down to that 280 level. Got a lot of support in that 280 level. So we'll see if we get a balanced trend in natural gas, definitely up, and also supported by the trend in XLE. So again, trend in natural gas definitely up, and gold consolidating just below that resistance of 2,700. It briefly breached that, and then again, it's trading flat under 2,700. We've seen several periods of this consolidation and then a break to the upside. So uh, if you think gold's got further upside, wait for that start of that break, potential opportunity there. Silver, again, broke 32. It's got plenty of support at 32, tested 33, got rejected. So I think we'll see further volatility between 32 and 33. Again, you've also got, silver's more of an industrial metal, also doing catch up with gold. So with China stimulus, so we saw that run up in copper on China stimulus. I think silver benefited somewhat from that. Palladium trending down, platinum pretty flat right now. Well, I did hear Costco's going to start selling platinum bars in addition to gold bars, so that should hold some of the platinum prices up a little bit. We'll see all the grains seem to kind of roll over. A lot of the commodities, agricultural commodities kind of roll over. In my humble opinion, I think part of the run up might have been due to the port strike, which now is suspended at least. So hopefully that'll get resolved. So I think that might have been part of the turnaround reversal into the commodities. So we see wheat topped out at about 620, heads back down, got plenty of support around 580. It breaks down from there, and then we'll see if it retests the recent bottoms. Again, I think the port strike was in part due to some of the run up in some of the commodities. Cocoa came back down. Coffee, sugar's been pretty flat. And we also, again, see that dramatic drop in bond prices on all the jobs data. So it wasn't just Friday, although Friday was the most dramatic drop in bond prices, most dramatic spike in bond yields. Also, I heard Kramer talking that the large traders, hedgers, have a record short on bonds right now. So, in my humble opinion, there might be a potential for kind of like a short squeeze, unraveling of those shorts on bonds. As again, we know longer term that the Fed will be cutting rates, so yields will come down, which push bond prices back up. So again, short-term traders, you might be able to benefit from a rebound in bond prices. We've got several ETFs in our ETF Google sheet that you can see and use to either short yield, long prices, and the different durations of bonds. So again, short-term trading, I think that potential opportunity on that rebound and that potential unraveling of the short and bonds. So again, we saw U.S. dollars, driving back up on global tensions, also stronger jobs market, which all the foreign currencies pretty much down on that. Yen also coming down. I saw some comments that they're not in a rush to further increase rates. So that yen carry unravel kind of stalled at this point. Yen back down. So I hope that all helps. Okay, let me grab a quick drink and we'll go through ETFs, our ETFs Google Sheet. So again, just a quick reminder, as we identify trade ideas, opportunities, or potential trades, be it a long or a short, in any kind of index, commodity, theme, etc. And we look for ETFs to trade that trade idea with the risk reward profile, etc. that we would prefer. So again, you can use ETFs to long or short based on whatever trade idea that you have. Anyone in the chat has particular ETFs you'd like to look at or particular topic, please throw those up in the chat. We can try to take a look at those. And again, just a quick reminder, you can get 24/7 access to our ETFs Google Sheet as well as our other Google Sheets, and also use our ETFs Google Sheet to find ETFs with all these different themes, opportunities to long or short. So if you join our Patreon, again, you can get 24/7 access to all our Google Sheets, including our ETF Google Sheet. Okay, I'll try to keep an eye on the chat. I see MD wants to look at China ETFs. We'll look at those. Just want to quickly highlight, in addition to our sectors sheet and our ETFs and our watch list Google Sheets, is again, we heard about both the port strike. Also, we, reduction in potential reduction in the number of airlines, and someone, Fairchild, I can't remember, it might have been Fairchild, was asking about transportation ETFs. So we can look at those. I wanted to see if there was a sector ETF for transports. And I found the sector spider on transports is XTN. So I've added that to our sectors list. Again, both in our ETFs Google Sheet and our watch list Google Sheet. So again, you can use this real time during the trading day, see trends in the sectors. So again, here's XTN. This is the sector spider on the transportation sector. Can we see it's up significantly on Friday? Probably the potential resolution of the port strike, as well as potential reduction in airlines. We saw the jets was up big. We see the only real sectors that were down on Friday was real estate, home builders, and utilities. Everything else strongly positive. So again, you can use this sectors sheet to see sector rotations, trends in the market as well. Just to kind of stick with the transportation theme a little bit. If we go down to transportation ETFs in our main sheet, see we've got a couple, IYT, TPOR. So IYT is the iShares Transportation Average ETF. TPOR is a daily Bull 3X, so it's a leveraged ETF on transportation. See that's up significantly. So if you're looking for something along transportation in general, either of those, travel, OOTO. So again, somewhat related to the airlines. So we've got several transportation related ETFs that you can use. Do you want to look at China? Yeah, I think last week we've made a more detailed look at the various China ETFs. Long yen is the leveraged long that we tend to use. Yang is the short. Quite a bit of volatility again on China stimulus. We saw again last week big gaps up in yen. We tend to get, might get a correction, might get 2 days up, one down, or 1 day up, one down. Again, we looked at how you can see in Webull. You can also see the Hong Kong, China markets, the inflows, also the global trend in the Hong Kong, China markets in Webull. So again, we talked about that all last week as well. Also got some thematic China-related ETFs, so CWeb, probably the most commonly known, KWeb. So again, all long China. The only short China would be Yang or YXI. So that's short the China 50, the FTSE China 50. So again, hope that all helps. Again, as we discussed, last week, I'd recommend you can compare the composition of these various ETFs, both in FinViz and also in the ETF database, and you can quickly access the links to their profiles in the ETF database in the notes column. Talk about oil briefly. So again, we saw that run up in oil. So you can long oil with Gush or UCO. We've got USOI, again, monthly dividend payer on oil. If you think we're going to get a correction in DRIP for it, or SCO. One comment we've discussed numerous times is, again, I would highly recommend you look at the composition of these ETFs. I know Gush and DRIP are mostly on producers. I believe oil or UCO is more on the WTI price, crude oil sub-index on WTI. So the producers might diverge from the actual current spot price of WTI. So again, depending on which way you want to play that, again, I would recommend looking at the composition of those ETFs. Natural gas, long boil, short cold, or long UNG/UNL. Again, in my humble opinion, the long-term trend in natural gas is up, although a lot of volatility. So again, you can short-term trade those effectively using these leveraged ETFs. Just be careful. We've got some on the general energy sector, so you can see our various ETFs on the energy sector in general. Find the one that has the composition and risk reward profile that you prefer. So talk briefly about airlines. So the main one we have is Jets. So you can see the performance of Jets. Also, a couple weeks ago, we added some from the Max Group. We've got a leverage long on Jets, Jet U, and a leverage short on airlines, Jet D. Again, we looked at the profiles of those a couple weeks ago and saw, their volume is pretty low. So there's some potential risk of liquidity. But if you think that run up in the airlines was overly exuberant, you might consider Jet D. SDAO, there's several of these. You can see the risk reward profile is pretty attractive. So if you think the market's peaked out and you'd like to try shorting any of these indices, we've got a number of leveraged ETFs. You can short the Dow with SDAO, and we've got S&P, NASDAQ, SQQQ, etc. The S&P, both of these are showing attractive. Again, markets are pretty much close to all-time highs. So you can find the short if you're, again, short-term trading, if you want to play for a quick dip in the index. S&P, Russell, again, SRTY. Not showing as attractive right now. Semiconductors, again, silver and gold, again, silver up, AGQ, short, CSL, small cap short, TZA. Talked about the transports, treasuries. So you can see the variety of treasury ETFs. So we've got shorts on the 20 TMB, TYO, on the 7 to 10s, or on ultra short on the 20s TBT. So if you think the treasuries will continue down in price, you can trade those. If you think we're going to get a bounce, TMF, TLT, TYD on the 7 to 10s, etc. Got the uranium ETFs, volatility. So again, we saw recently increasing volatility. Again, we talked about the variety of long volatility, UVXY or VXX, short SVIX, SVXY, SVOL. Okay, I'll try to keep an eye on the chat. If anyone else has any other topics, ETFs you want to take a look at, I'll try to keep an eye and we can come back and take a look at those. Otherwise, I want to get to our theme for this week. So I'm going to grab a drink and we'll talk about how to make money trading in the fall. Again, our theme for this week is making money trading in the fall. So let's look at the seasonal trends, historical seasonal trends for the markets in the fall. So again, fall started, I think, September 21st or 22nd with the equinox, goes through the solstice, probably December 21st, 20 or 22nd. So right before the holiday season. So if we look at, again, this new chart shows a breakdown of the historic S&P performance for 5 years, 10 years, 20 years, and since 1950. So if we look at the seasonal trends, historically, September is the worst month. In October, we get a rebound. October is generally pretty positive. November's in the past 5 years has been the most positive, past 10 years, the most positive. So in the fall, we get this nice rebound up into November. December's been relatively positive for the past 5 years. Over 10 years, pretty flat, but generally positive. So the fall is a very positive season after, we get that potential historical dip in September. We get a nice rebound up until the holiday season, and a slowdown probably due to people going on holiday, etc. for the holidays. So again, nice uptrend going into the fall. This year, August was not bad, and September so far, or actually was historically contrary to the historical trend and was positive. So this year we've got a pretty positive trend going into positive seasonality. So unless, the global tensions, etc., or something unexpected happens, the direction, the trend historically would be up until, we get to December. Again, the holidays, also probably some tax loss harvesting, tax loss selling, etc. Going into the end of the year probably causes a reduction in the performance in the market in general, but again, all positive. So again, we would expect the trend to continue upward through the end of the year in the markets, unless we get some, black swan event like the global tensions disrupting that trend. And again, 2024. August, September have been positive, whereas historically August been weak, September negative. We talked about last week, we talked about October, how to make money trading in October 2024. And you can hear how the October effect, how we get typically crashes in October, although typically caused from the negativity of September. So you can hear those discussions via our previous videos. And we've talked about trading in the fall before. And so you can access those videos as well via the links in the notes. And you can hear how the markets typically perform in best performing sectors and industries. So again, going into the fall, sectors like energy, retail, going into the holidays, etc. Also, in my humble opinion, I think we might see some healthcare rebounding, although that may depend on the elections. So we do have the elections in November, probably cause some volatility and then decrease in volatility after the elections. So I hope that all helps. So if anyone else has any last minute comments, topics you'd like to discuss, questions, please show those up in the chat. If I missed your question, I apologize. So please put those back up in the chat, or you can put those in the comments to the video. We'd also love to hear your feedback on what we can do to improve our weekly trading game plans, any of our other videos, our tools and resources, our Google Sheets, etc., our community. Again, please let us know what we can do to make improvements for the benefit of all of our fellow BeachBum traders. We hope you like this content. Please do us a favor and smash the like button on our videos. We really need your help to directly share our content with your fellow traders, repost our content on your social media profiles. We want to continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. And again, we really need your help to do that. So we appreciate all your support and help. Again, if you have any questions or comments or stocks you would like us to take a look at, you can put those in the comments to the video. You can tag us in our Discord. Again, our Discord's free to join. You can tag us. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, so take care of that one. And we would not DM you or send you a friend invite without notifying you first. We wouldn't ask you for money, so anyone else is an imposter, please ignore and report them. So tomorrow we'll look at our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend paying stocks and option strategies to also generate income while we wait for our swing trading stocks to set up. So if anyone again has any other stocks you'd like to look at, please put them in the comments to this video in the Discord, etc. And or you can contact us on our other social media sites. You can find links to all of our social media sites profiles on our homepage in the link section on our homepage, beachbumtrading.com, bum without the U. Again, plenty of ways you can contact us. So with any questions, stocks you'd like us to take a look at, and recommendations for improvement. So thank you again to everyone that participated in the chat today. Appreciate all your participation and support. We hope to see you back tomorrow for part 2 of our weekly trading game plan, 10 a.m. Sundays for part 2 of our weekly trading game plan. We'll take all these trading strategies, trade ideas, etc., to pick our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list, etc. So thank you again, and have a great day.